Hey, well, last weekend was the annual Duck and Beaver game. The Beavers did not show up. Good job, Ducks. Anyway, but on to better news. The Feds met yesterday and they cut interest rates by 50 basis points. I just like to remind people, our clients who automatically think that the interest rates for mortgages went down by a half a point. And the facts are, what the Feds do is they manipulate short-term rates to encourage spending. So as inflation gets out of hand, they raise rates to slow things down, and when they want to encourage spending to get the economy going, they'll lower the federal funds rate, which is your credit cards, car loans, and home equity lines of credit. So while they do affect mortgage rates, they don't directly affect them, they do it indirectly. So yesterday, the Feds met and they lowered the federal funds rate by 50 basis points, or a half a point. You might be thinking, gee, mortgage rates are a half a point lower yesterday. In reality, that rate was already baked in. Like, investors know and the economists know that a lot of times they're anticipating what the Feds are going to do, and that price cut or that interest rate cut is already baked into the rate system. So with that said, the market kind of already anticipated what was going to happen. So rates had already come down, and actually yesterday rates may have gone up just a little bit. This morning, this is the day after the Fed meeting, rates look like they could be improving a little bit. So good news is, in time, there should be 2 more rate cuts this year. There's 2 more times where the Feds meet, and this is good news. So as those rates come down, mortgage rates will also come down and follow inflation. So if you want to learn more, if you want more detail, just shoot me an email and I will give you all the detail you want about the federal funds rate, what the market's doing, when it's a good time to refinance or buy, or if it's not a great time to do that yet. So everybody, if you think about back in 2020 and 2021, everybody got a very low rate. I remember refinancing to 1.99 on a 15-year loan. So good rate. You probably had a rate in the mid 2s, low 3s. And so now rates went up to, in October of 2023, rates actually hit 8.5%. It's a bad rate coming from the mid 2s on a 30-year loan. So that's roughly a 6% difference. Rates are coming down. They're, a point and a half down, maybe even coming on 2 points down. They could come down a whole lot more as well. So let's hope and pray that's the case. But reach out if you want to just talk about it and figure out what's the best thing for you to do. Have a great day. Talk to you soon.